If you're looking for a wave of issuances, right, we have multiple rules and regulations in which we have to address in order to be able to attract those.
When you do normally a prospectus in the US, you copy and paste, if you're a fintech firm, the risk factors from the one that just did the IPO before you. It's all copy, paste, copy, paste, copy, paste. And 90 days later, here we go. Nothing that we had in our prospectus had ever been defined before. And so we spent a lot of time sitting there and discussing through what is a blockchain, what is a smart contract, what is a wallet.
Security tokens, of course, is a MiFID instrument. So we just fall under, we have to be super careful. Me, at least, under the FCA, an unregulated product, much easier to deal with.
You would need an ATS. If we're talking about trading these new securities, right? So that's a trade against a regulated ATS. And that means that the regulation around it, right, as a BD, connecting into and all those AML KYC pieces, we've been working on this since 2013. This was our first use case when we started Symbia. We spent 3 years in the state of Delaware changing the law so that the place in which you incorporate in the United States is the place that actually governs the rules and regulations of your security. So 85% of all companies incorporate in the state of Delaware. So Delaware law was changed so that a blockchain, distributed ledger, could be the sole books and records of a company. You could file there and incorporate there and create any structure, right? So from that structuring in the US, then you need to take the next step of, okay, now that I can legally do this, how do I do it in the form of a securities offering? Whom can support those securities offerings? What kind of infrastructure exists? How does it get promulgated against the national market system? And if you don't have a security at the DTC, it's not part of the national market system. So you're in a secondary part of the market system. So what we're really saying is that there's a lot of barrier in order to be able to actually start issuing these things wholesale, transitioning them from one type of promulgation, uncertificated, dematerialized securities, or in the worst case, an actual physical certificate, into a token-based solution or a smart security, as we call it, and then have that execute through the national market system.
You need to have patience. You need to, because just because you understand blockchain doesn't mean that the regulators do, and they haven't traditionally hired from that area. And so you have to be patient. But I think that if you do sit down with them and you do talk to them and you're very patient, then you do get the results. But I think that there's a lot of folks that don't want to sit down with them because they fear that they're going to get fined. Now, that'll happen if you've already been out there doing business. We kind of talked to them all before we went out there to do business.
We see the Delaware law eventually clashing with federal rules and regulations, because there is a requirement, if you're going to be a fully S1 listed security in the United States, part of the national market system, you have to be DTC eligible in the form of your security, which really means you have to take the true property right ownership of a private company, cede it to Seed & Co., all property rights, and then in turn, they reissue contractual rights back to the companies through the custodians and the broker-dealer to the end investor. So that whole structure is designed to try to create electronic records, and it requires centralization. So coming with a decentralized concept really dramatically changes everything.
Now, we talk about Reg Ds a lot in the United States for private offerings, but I do think that Reg S is going to become much more important. With the Reg S, you can sell to retail, around the world outside the United States. And so I think that you're going to find that there's a lot more Reg S. A lot of companies will come out with Reg Ds, but they'll come out with Reg D, Reg S. So they can only sell to qualified investors in the US or accredited investors. But outside the US, you can sell to absolutely anyone, as long as they pass through the KYC AML and come from the right countries.
I really think that the next wave will have to come from the security token space. But I'm with the regulators that I'm working with, I can't see we're there yet for this breakthrough, unfortunately. But I'm really looking forward to it, because it will also benefit my business immensely.
This is something that's always concerned me about our market, saying that these rules are unclear. That's just not true. They're absolutely clear. The people saying they're unclear just don't want to abide by them. They don't like them. So they say they're not clear, but they are extremely clear. And it's been said over and over again how clear they are, which then freezes traditional institutions from doing what they know they should do, which is drive security token infrastructure. And instead, they're building infrastructure for crypto markets because, as Henry said, no one's enforcing. No one's attacking the crypto markets. To add crypto to your securities trading application is easier than issuing a security token and trading it. And it shouldn't be, but it is. And so when I'm looking at it as a business operator, am I going to build out a broker dealer for securities tokens, or am I going to build out a crypto trading application? Well, it's not even a question, right? The path to easy money is in the crypto trading application. The reason the crypto markets are where they are today is because people don't want to trade securities. They don't want to be embroiled in the rules and regulations that prevent them from doing what they want to do. And it's sold as free market utopia. But we all know that it's not, because these markets are concerning, to say the least, and the way in which they operate, and lack of infrastructure, lack of rules and regulations to ensure fair markets. But when you're in a global basis, it's easy to overlook $100 million hack in one wallet and another $100 million hack in another, and a fork over here, because here comes the next one that I can get 10x on. So I'll just cash that one out and go to this one and get 10x. That doesn't exist in the security token world. So the excitement, the sizzle, the sexiness, all the money is flowing into a different marketplace.
I think the single barrier when it comes to regulation for security tokens is that there has not been enough willingness from regulators to regulate NFTs and ICOs, so certain types of assets. The honest truth is that if I am Aston Martin today and I want to fundraise, and someone comes to me and tells me that I can sell a picture of a car with no legal or contractual rights and no liability, and I can get money, it's awfully hard to say no to that. And so all of the promises perhaps that people were hoping security tokens could bring have been washed out a little, and issuers haven't come because they say, well, why don't I just issue an ICO or an NFT? And the honest truth is that, at least in most jurisdictions, enforcement risk on issuers is very, very low. In 2017, here in Hong Kong, the SFC were doing dawn raids on issuers' offices, shut down 2 people, and then it all stopped. And yes, there's a lot of focus today on regulating intermediaries, which is what I think regulators know how to do best. But until they start looking at the actual asset layer and saying, hey, most people, when they buy an NFT, they think they're getting some kind of legal contractual right. They're really not. Is it really safe that people are investing such a large portion of their portfolios into art? Again, nothing wrong with you want to buy art, but is that a real investment asset? I don't know. And until they actually step in and are willing to enforce on issuers, I don't think you'll see the security token market really start to take off in a big way.
We're trying to reimagine common market infrastructure and reimagine global regulation and how we view securities in a fair and clearly defined marketplace. And that is a big issue when you're dealing with something that is very dramatically different, driving huge returns. And when the asset classes value proposition is speculation, and that speculation continues to prove to be valuable, as an institution, I'm better off investing my money there than taking this risk to say, yep, we know these are securities, we know the rules, and we're going to do these things inside that and risk being enforced against if we make a mistake, versus going over here where there's very little chance of enforcement and a lot of opportunity to make money. So this is going to continue until hard enforcement occurs in those markets, which then make people say, oh, wait a minute, I've been trading penny stocks without any kind of protection, and that's risky and I shouldn't be doing it. I'd rather have the protections of a structured market in which I know the rules and regulations and how the game is going to be played when I play it. So with those as the competing for the capital to build this out, that's a hard competition.
I think a lot of us come from capital markets backgrounds, and we have ideas of how the market might be able to better function. And so we try and build that and hope that we can then fit that into the world and that there will be demand. And I don't think that's always the case. And I think that what we need to look at in the security token markets is to start by learning from actually the cryptocurrency markets. I suspect that people from traditional finance, or TradFi as we like to call it, don't fully understand how big the cryptocurrency markets have gotten and how wide participation has been. 24 months ago, quite frankly, crypto was a fringe curiosity. Today, here in Hong Kong, for example, where I'm sitting right now, if you're under the age of 25, 50% of your investment portfolio is likely to be in cryptocurrencies. If you're under the age of 18, 100% of your portfolio is in NFTs because you can't buy anything else. And I don't think that you should underestimate just how much crypto and NFTs and etc. have exploded into the public consciousness. So can we take an equity of a company, a normal share, issue that directly on the blockchain, not as a stable coin or as a derivative of investment contracts, while still being able to open up access to retail investors using some of the same principles that you're used to in cryptocurrency markets?
If we look at crypto and say, well, that's where we want to go, we're probably never going to get there because those crypto issuers spend all their time saying why they're not a security. And absolutely fight hard to say they're not a security, so they avoid these rules and regulations. And Lars, the problem we have with NFTs now is in the US, they're looking at them and saying, that's an investment contract. So you don't have to call it a security, but that's an investment contract. Therefore, you fall under securities rules and regulations because you're only buying that NFT to trade it in the future for value. So we want to say there's an analog between crypto and security tokens, but there's really not. There's a huge differentiation in the middle. The crypto market is a global market, which is operating relatively unregulated in a way in which any potential trader can go access these types of instruments and trade them. Whereas in securities, you have geographical regulation that you have to deal with. So country to country is looking at them differently. So we don't have a global issuance that everyone can swarm around and create global liquidity. You have liquidity broken up into pieces. And then you have the underlying infrastructure, which is being operated in the crypto world through blockchains in which there's incentives around staking or mining. And then you look at which of those solutions can be used compliantly in the securities world. And that's a very difficult thing to answer at the moment. So then the platform itself, if you move to something like we offer, which is an enterprise version that doesn't have crypto economics, now you have to have incentives for participants to run the nodes, to create a decentralized environment, to be able to issue onto natively, and then in turn be able to transact from there. So there's a large amount of barriers that are created in order to get there. The DTC isn't ready, the exchanges aren't ready, the custodians aren't ready, the brokers aren't ready, no one is ready, at least in the United States. I can only speak to the United States. There is no institution or part of the current system that is ready, period. We have to scaffold up a new marketplace from the ground up and have it as a, basically a competitive marketplace to the traditional market. And then over time, you could see issuers move because of the value from the current systems to the new systems. We're nowhere near that infrastructure creation yet, and we don't have enough participation, and we don't have enough incentive, right? When you look at what's happening and where the money is flowing in our marketplaces, the money is clearly flowing into the crypto world. It's flowing there through the VCs and the infrastructure and all those pieces because it's a direct access point into distribution. If you look at the VC dollars, you can see the massive amount of money flowing in that space and almost no money flowing into the security token space.
INEX, we did the first ever IPO of a security token. We raised $85 million from 7,250 people in 74 countries. We went to the New York Stock Exchange and NASDAQ. We said, we got a full security, it's digital, we'd like to list. They said, look, we're not ready to. The DTCC, I guess, is kind of like, it's the kitchen, and New York Stock Exchange and NASDAQ, I guess, are the restaurants. So we had to bypass it altogether and list it on an ATS that we bought. And a lot of digital assets have to go that route because the DTC is not fully prepared yet for what's happening. And, yes, we miss out on the ability to access all of the networks that happen when you go through a national exchange. But if the national exchanges are ready, then maybe the network has to change. You can't put a square peg through a round hole. And I think that in the future, maybe you don't go through a broker and then go onto an exchange. Maybe you just deal with the exchange directly. And I think that, that's certainly the way that people are trading crypto right now. There's no qualified custodian for digital securities. Now, there is for digital assets like Bitcoin, Ethereum. You can go to Fidelity and do your digital custody there, but not for digital securities. And a qualified custodian is needed if you are a real money fund in the United States. You want to access that kind of capital, you need FINRA and the SEC to figure that out. So what we did is we use MetaMask wallets And so it's more of a decentralized approach where you custody yourself, your securities. That's one way to get around it. And then the thought is, well, that doesn't sound very secure. So we did it with an ERC 1404. And the nice thing with doing an ERC 1404 is if you lose your MetaMask wallet or you lose whatever wallet you're holding it on, that's fine. We can revoke from that and we can issue on another one. Because as the SEC, kind of explained to us, you can't lose your 401k in a boating accident. And so if, to get around custody, I guess we worked with the right kind of smart contract whereby we made it such that it's almost unstealable, the actual token. And so custody becomes less important. But this is kind of how the infrastructure is changing. It's almost like the way that the rules are set up in the US, people say we can't work with the reg. Well, you can. You just have to find a way to thread the needle. And it may not be advantageous today compared to, let's say, the national system, how things are set up. But I'm guessing when Henry Ford came out with the first car, there probably weren't that many gas stations, but it didn't mean that he went out and bought all the blacksmiths. What I'm saying is that sometimes you come out with a new technology and you just have to drive your own path, and you can't rely on the path that was used in the past because soon it's going to be in the past. So I think Coinbase was asked once when they got that 100 billion valuation, would you buy the New York Stock Exchange? And it's kind of like asking Henry Ford if he'd buy blacksmiths. Why would he? It's a new technology. We'll bypass the DTCC if they're not ready for us. And sometimes you don't have to worry about the current system. The current system certainly has a lot more breadth and a lot more distribution, but sometimes you've got to change that, and you got to change the way that distribution happens if you want to be successful.
You have to ask the banks to set up some new infrastructure. For the banks, it's just a pain at the margin. It's a pain in the neck to do, but you can start to see that pressure. You've got more issuers coming. You've got issuers who come and say, well, actually, what we really want to focus on is the whole pre-trade coordination part. And I know the primary partner, and Mark will have some words to say about that. How does the issuer get together with the banks and the syndicate to say, yep, this is the deal we want to do, who's taking how much? We've got to have interoperability in terms of coexistence of TradFi and the new stuff. What we're able to achieve here with SDX recently with the bond issue and having a digital CSD and a digital exchange meant that underneath the hood, the banks could distribute product to their customers without having to do anything massively differently. I think that coexistence allows us to take some small steps in there, because the banks aren't going to throw out all this infrastructure overnight.
We do need to move away from just trying to digitize traditional capital markets flows. We do need to rethink how that actual infrastructure works in the first place. Some of our advantage in Asia comes precisely because some settlement infrastructure is so antiquated. So the DTCC in America, I think, is actually already an improvement over a lot of Asian markets. Because of that infrastructure, I think we've almost been forced to just totally leap to rebuilding that market infrastructure from scratch. Honestly, I don't think that's where the innovation should come. I think the innovation needs to come in terms of how you face off against your customer, how you provide the same customer experience that people are used to from Amazon. And I really think you need to make it as easy for people to invest into a company as it is to buy their products online. Otherwise, I'm not entirely sure where the innovation is. What I think crypto has shown, and again, really should be an unignorable fact at this point, is that there exists the possibility of a radically different paradigm for how people begin to think about, let's call it investing. And I won't get into the semantics of whether or not buying in a non-security or NFT is investing, but just how they're choosing to spend their capital and hoping to make some kind of financial return. Crypto, I think, has shown us that capital markets can and will follow the exact same business models that every other industry in the world is following. So when you look at the way that, I don't know, people sell shoes online these days, it's all B2C. I go direct to consumer, I communicate direct to consumer. I don't need to usually deal with layers and layers of intermediaries.
I really think that looking at the crypto market is not the way to look at it, because the securities market isn't going to be the crypto market. We have to build something new and innovative that addresses the securities market, but it has to all be within the regulatory paradigm, because regulated entities must participate, right? Where this technology works the best is actually not in a singular non-intelligent token that just gets moved around for trading purposes. It actually works the best when there's some kind of sophisticated workflows that are involved in which you can automate those workflows, and something that then in turn improves the back office function or removes the back office function completely and automates the security through its life cycle. So you have savings there, right? And so when you think about infrastructure and savings and all those pieces, that's where this technology really shines, not in speculation. The big 800-pound gorilla is you've got a security token on a ledger. Where's the cash portion? Where's the consideration for the transaction? So we don't have enough actual cash that we can use to settle at the moment in a legitimate way where we can have a fulsome network with a lot of issuers and traders, new issuances, and a way to transact and settle these things.
Yep. If CBDC comes along, then inherently you will have marketplaces, custody, means of payment, and you're going to need to connect up those three things. It seems like the central banks will focus on wholesale CBDC, which will be a good thing. However, they need to do a lot more than just that. They need to change the access rules. They need to deal with all the cross-border issues, and then it starts to get very useful in terms of single pool of liquidity, cross-border collateral that's in there, and people may trade more when that happens, but I think we're a little ways off the wholesale CBDC part yet at this point.
I think that a lot of the time, imagination hasn't been put to work. I think people looked at security token and said, well, that means it has to be securitized by something. Let's do real estate. There's only so many real estate companies that want to tokenize an asset.
I think you're right. We were very distracted by things like real estate, which was never going to be big. That's never going to be the largest market.
If you list a $20 million piece of real estate and you only sell it to accredited investors and it's only 1,000 of them or 100 of them, there's not going to be a lot of trading. But if you list things that have an underlying that's volatile, let's say against gold or against oil or Bitcoin, these types of things are going to have volatility. There's going to be a lot of people following it, and there's going to be a lot of excitement. I'd say we've got about $3 billion of issuances that we're expecting to do this year, with the Premier League being one of them. You know, we've got a sports team that we announced a couple of months ago. ALK Capital owns a Premier League soccer team in the UK, Burnley, and we're going to do a raise for those guys and do a security token for them. That's going to be pretty exciting. And that's someone that's got a heck of a lot of people that want to invest.
If we're talking about flow, the sizzle, as you say, the retail investors, the really big numbers, the way that actually we've begun to be used to in the cryptocurrency markets, I think that will come from equity offerings. Companies where people say, yes, I would love to be able to buy their equity. I cannot buy their equity today, or I cannot buy it in a digital format that I'm used to. And if this is the way, I won't even really care about the technology. I'll just care about the access that I can get. The fact that people like Coinbase or OpenSea are even thinking about listing on traditional stock exchanges using paper shares after having raised private VC money, even over the stern objections of their own communities. When Coinbase did the listing, when Open Finance is looking at doing the listing now, there's mini community revolts where people say, what are you doing? You say tokens are the future. Where's yours? Again, I think that until you talk about marquee issuance, Dominic, until you see a major crypto company want to actually tokenize their shares directly and choose to list digitally instead of using paper shares, you will not see mass adoption of security tokens. To be very transparent, Fusang, yesterday, sorry, everything's blurring a little because it's been a busy period, but yesterday morning, we announced that we were that we'd received approval to do an IPO for ourselves, for our own company. And to me, the interesting point, or at least our very unique view, is that the tokens we've issued directly represent shares. So these are not tokens that map to a paper share somewhere else. These are not investment contracts or derivatives. The token effectively represents the share certificate, and through the blockchain record, we construct the register of members of the company in real time. So if you're a token holder, you're the direct legal shareholder in our company, as you would have been if there were paper shares.
The issuers are staring us in the face. There are a lot of public issues already that are trading on exchanges or ATSs. There's 13,000 companies that trade on the OTC. Now, the SEC said about a year ago that they see all assets moving onto the blockchain. So there's 13,000 issuers right there, and we're working on a factory that's going to take them and do a token for equity for token swap and then list them on our exchange. There's different tax jurisdictions all around the world, and people pay tax for crypto and they pay different tax for securities. And if you can have a security that gives you the same sort of benefits that crypto would, or the same movement, but at a much lower tax rate to certain countries, that's going to be pretty interesting to people.
Instead of issuing something weird and wonderful, why not take traditional products? I think security tokens trading on traditional instruments, to me at least, from a broker point of view, makes super perfect sense. And I think we can also see the volume. And as the broker, at the end of the day, I make a living of the volume and the broking. It's not super interesting for me to list something that's super illiquid, aching penny stocks, where I can't make commission. I of course need something that moves and where there's volume. Also, as Henry said, I also get asked for listing weird and wonderful exchange tokens, and I always look at the coin market cap or something like that, top 20 coins. It's like in foreign exchange. A lot of people, they'll come and ask, for local markets, ruble, Mexican, and then you ask them, how much are you going to trade? Well, I might trade 2 trades a month. Well, sorry, sir, it's not really worth it. And 70% of the business, if you just cover euro, dollar, sterling, and yen, maybe some Swissy today, then you have 98% of the volume covered. Okay, then leave the rest to some specialists out there, and I'll have the same approach on the security tokens. I'm sure there'll be some penny stocks player or whatever they'll be called in the future, and then I guess I at least will need to focus my energy on where I feel it's transparent, where I'm comfortable with the underlying AML and KYC. And of course, where I can make some commission at the end of the day. And that, of course, is a function of volatility and volume.
If you can get retail involved from day one, then it becomes very exciting.
I agree. Retail participation is absolutely important. I don't think you can have a market that functions without retail flow. You have a lot of institutional markets that exist in the world, but most of them at some level are layered upon retail access. So most of the flow in a market might come from an institution, but I do think you need some degree of retail flow to make everything go round. And that's why when we were first looking at this space, I was very, very clear that we needed to build an actual stock exchange. We needed to be able to take very traditional looking securities, bring them through a very traditional looking IPO process, turn these into public companies where they could then do retail offerings of their stock.
How do you attract retail? How do you attract the audience? Well, you have a cryptocurrency trading business. Cryptocurrency, everyone knows. Security tokens, it's a bit of a mouthful still, and people have to get educated to it. But once they come into my shopping mall because they want to trade Bitcoin, or they see me at the Daytona handing out a trophy, then they come in and they say, well, what are these security tokens you're offering? And every security token that I offer is going to have a community attached to it. Whether it's 600,000 people or 1 million people that already are familiar with the product or the company, that's the type of thing I think that builds community, builds trading volumes, but also builds interest in what you're doing. I think that early on, guys that got into this space thought, we'll list some real estate, and that's going to get a lot of excitement. But it doesn't get a lot of excitement if it's only sold to accredited investors. You need to have something that's got sizzle. And if you don't add things with sizzle, then you're not going to be successful in this business.